Good morning, everybody. It's Monday, April 20th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Go check them out. We help originators get more loans from Google and social media. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, as we talk about what's going on with rates and pricing, markets, all that good stuff. A lot to talk about this morning. I woke up to news. Well, I didn't wake up to it, but over the weekend we saw news that the Strait of Hormuz was closed again. The U.S. naval blockade had taken out an Iranian ship, not the whole ship, but had basically taken out their engine and taken over the ship. And it really looked like this morning we were going to open up worse, and we haven't. So we're going to talk about that. It's important. We want to unpack that. So we'll spend a little bit of time on that. Remember, if you want to join the show live each day and not miss a moment, make sure you're signed up to get our text reminder that I'm going live. I send out a text as I go live each day. You can sign up to get on that list at hmmr.io/reminder, hmmr.io/reminder, or use this cool QR code over here. Also, you can sign up for our free email lock advice, www.ratelockadvice.com. I was just about finished with it, but had to put it on hold for a minute as I hop on the live. That'll be going out shortly. And you can also sign up for our text alerts at www.ratetextalerts.com. And I'll show you more about those. If you're here live, say good morning. Love to hear from all of you. If you are on the replay, don't forget, do me a favor. Just give me hashtag replay in the comments. Facebook always tells me I get hundreds and hundreds and hundreds of replays, but I don't really think that people are watching the replays unless you tell me you're watching the replay. And you do that by giving me hashtag replay in the comments. So whether you're on Facebook or on YouTube. Also, don't forget to smash that like button, subscribe, all that good stuff, depending on the platform that you're on. Let's go ahead and say hi to the live folks. Just a few of you: Tom Didmore, Megan Bassell, Holly Johnson, Amber Moser. Good morning. Amy Blauser, is that Mr. Zane or is that straight up Amy? Good to see both of you either way. Randy has some questions. How does the strait closing affect fertilizer shipping and thus the world's food supply and economy? That's a little bit deeper than I generally go, Randy, but I don't know. I don't know how it affects fertilizer itself, but it affects a whole lot of everything. You could argue about how it affects food supply. So that's why there's a lot of talk about how this will affect the global economy and what the, not long-term, but longer-term, mid-term implications will be from all of that. So we'll talk about that. All right, let's go ahead and get started. We'll jump in. Let me go ahead and share my screen. We'll get to the good stuff here and go from there. You'll notice this morning, I'm switching back to the 5.0 coupon. I just feel it is becoming the more relevant coupon. According to Matt Graham over at MBS Live, you can see that he has the little star next to it here, which means that he thinks that is the coupon that is most relevant. Generally, he's looking at trading volume and all that stuff to come up with that. I'm looking at how I see lenders react to pricing. But either way, the 5.5 is down a basis point. The 5.0 is down 3 basis points. I mean, it's really it doesn't really matter which one we're looking at. They're so close. But I'm going to switch back to that 5.0 because I am optimistic that we are going to continue to see things improve from here. And I believe that that's the coupon that'll be more relevant to lenders as we do that. So the 10-year Treasury yield currently at 4.25. You'll see on Friday we ended at 4.25. This morning we're at 4.25. And you say, wow, that's kind of crazy because I thought things would be worse. And actually, I did think things would be worse this morning. So over the weekend, we got a bunch of, let me bounce this in a little bit here. We got a bunch of, headlines, basically that the Strait of Hormuz was closed again, all but at a standstill, as they said. And basically on Friday we saw, let me kind of stick to where we're at here and I'll get to this. So on Friday, let's just kind of do a quick recap like we usually do, right? So you could see right here in green, I'll post it. You could see right here, there was this big jump up, big increase, nice increase in mortgage-backed securities. We had a very nice green candlestick right here. For mortgage-backed securities on Friday. And that was because the Strait of Hormuz was supposed to open up to commercial traffic, and that would get oil flowing. Oil prices dropped. Bonds did pull back a little bit from the best levels of the day. Like you could see, like they touched up here and they ended down here. But compared to here, right, you were up that, but down to here. But that's still a whole lot higher than here. So as I draw those weird lines on there, bottom line, Friday, we were a little bit off those best levels of the day, but not enough to get worried, not enough for lenders to reprice worse at all. Rate sheets today are going to be the same or maybe a little bit worse. And you can see that rate sheets were some of the best rate sheets that we had seen in about a month. 6.29. I think it could be even a little bit lower than that this morning for lenders that held back a little bit over the weekend. And depending on how aggressive lenders want to be with the reaction that markets have on what's going on. So normally with the headlines like this, we saw, Iran hesitant on talks as tensions rise after the U.S. seizes a ship. So over the weekend, the U.S. blockade, the naval blockade, Trump did not pull that back. Even though Iran was going to allow commercial traffic through, Trump was not allowing Iranian traffic through. So, there was, they took out the engine of a ship and took over the ship, and Iran was not happy about that. And they came out and said, hey, well, if our stuff isn't getting through, then neither is anyone else's. So they, for all intents and purposes, closed the Strait of Hormuz once again. And then Trump, I have to see where it is. It's in one of these here. Trump put out his usual social media tantrum, negotiation tactic. I don't know. You call it whatever you want, but hold on. It's on one of these. It's a funny one, so it's worth us digging a little bit to find it. Come on. I know it's in here. No. Oh, here it is. Okay. So he said, we're offering a very fair and reasonable deal, and I hope they take it, because if they don't, the United States is going to knock out every single power plant and every single bridge in Iran. No more Mr. Nice Guy. So, but the reason I'm bringing this up, the fact that bonds are down a whopping 2 basis points this morning, despite all of this, that shows us what's going on in the psyche of traders, what's going on in the traders' heads, right? They are not concerned about a re-escalation. Markets are not pricing in concern that we're going to see this thing totally blow up. It's almost like, we figured that there'd be some bumps in the road and we're okay with it. Looking at the headlines like we did, I would have expected to see mortgage bonds down 20, 25 basis points this morning. When you see the Strait of Hormuz, look, because we saw that positive reaction. This was 40 something basis points. Let me see. Hold on. Let me pull this over and I'll get this. All right, here you go. So you look at where we were at. I mean, we were up, at the end of the day, we were up 20 to 35 basis points, depending on which coupon you want to look at. That reaction was due to the Strait of Hormuz being opened and things going well. So you would expect that to have fallen apart, and it hasn't. So what does that tell us on where things are going from here? Well, it shows us that markets are still optimistic that we're going to see a deal get done, that the Strait of Hormuz is going to get opened, and that things are going to return to normal. That's kind of what it's really telling us. That's what the actual market bond pricing is telling us. Look at this. We're not out of this. Trend is not broken yet. This improvement that we've seen is not broken. So that has us in a position. Anything that's closing near term, I would still cautiously float. Anything 15 to 30 days out, I would absolutely make sure I float. The Fed meeting, we're going to see the Fed meeting in a couple of weeks. I'll touch on that in a minute, but it looks like we have room for rates to improve. The fact that markets are not losing their mind over this, that it's basically flat on the day. Look at this. I mean, and if we do the 5.5, it might even be up a basis point or two here. Not like that. They're both exactly the same at the moment. So it doesn't matter which one we look at. What did Ron say? Ron said, let's take a look at what some of the things that you guys said real quick, and then we'll come back to it. So First of all, today is National Cheddar Fries Day. Booyah. I can get behind that one. Love me some cheddar fries. How does the trade closing? We talked about that one a little bit. Yeah, delusional ramblings. Some would argue it depends, Tim. Really depends on your bias, on what people think. Just heard this morning we have double the number of planes in theater than we had at the start of the conflict. Israel is restocked as well. Iran says they're not interested in negotiating, yet U.S. envoy is en route. Does anyone really believe our team is going over there without some confidence Iran will be at the table? Yeah, I agree with you, Ron, on that. Speculating that they said they're not going to, but yet they keep showing face that they're not doing anything, and yet they seem to keep getting pulled into this stuff. And markets believe they're going to have to do something too, because they don't want to see things get this way. Ron also did say the closing is increasing fertilizer prices for those who have not already hedged their purchases. Most of hedges in place. So thank you, Ron, for answering that question. Love the community. So, all right, my friends. Well, 11 minutes in, I'm trying to keep these shorter these days. I think we've kind of nailed everything. A couple of quick articles I did want to share with you, though, real quick before we move on and wrap it up for today. Let me go ahead and pull this over here. There's an interesting article in the Wall Street Journal. Kevin Warsh pitched a case for Fed rate cuts. His future colleagues are skeptical. He has argued an AI boom will ease price pressures, citing Alan Greenspan's patience in the 90s. His future colleagues see an economy that looks nothing like it did then. So this was kind of an interesting one. Kevin Warsh spent the past year constructing a case for the Fed Reserve to deliver the interest rate cuts President Trump wants, an artificial intelligence boom that would soon deliver a productivity surge that would hold down prices. I think that could happen. I also think that we're going to see fatigue in the economy. Look at what happened with PepsiCo. Pepsi has lowered their prices on things like Doritos and chips and stuff because they got insane. I don't buy a lot of that stuff at the store, but I always thought a bag of chips was like $3-4, right? They were like $7 for a bag of Doritos. $7. Now, I don't want to make this into a political thing, but when you also pull back the SNAP money that was being spent on all this crap, forgive me, guys, I got to blow my nose. All right, thank you. So when you look back at, you look at the fact that there's less disposable money being spent on this garbage, and it shouldn't be. The money that's given to people for food, to get food is for food and sustenance, not for Doritos, right? So, but they just kept increasing prices on these things, and people are fatigued and they stop buying because people aren't buying $7 Doritos. And I remember when a candy bar was 50 or 60 cents. I feel like I'm like really dating myself. But remember that you'd go into a convenience store, a gas station, you picked up a candy bar, you'd expect it was like 50, maybe 75 cents. They weren't all king size, they were smaller, and it was 50. Like now you go in and you grab a candy bar, it's like $3.50 for a candy bar. But again, it's a king size, like they're trying to load you full of that crap. But it's really getting easier and easier for me not to eat this shit because I'm not spending that much money on it. It's ridiculous. So it's the same thing here. I think we could see a bit of a productivity surge with AI. I think that is going to come. I don't know if Warsh has a clear eye on it. Markets currently believe that by the end of the year that we will see a 50% chance of a rate cut. It's a coin flip to them right now. Markets have a coin flip. This is by December that we will have at least one rate cut. And there's a little bit of possibility of two, but that's more like outlying betting. But overall, it's about a coin flip. So they're still expecting that. Sean says, replying to Ron, steak fries crispy with cheddar and bacon. Oh, hells yeah, brother. Ron Siegel, the article from Nikki T last week regarding Powell leaving was enlightening. Yeah, that was a good one, right? I did talk about that one. All the snack foods are being impacted by the proliferation of the GLP drugs. That's probably very true too. Isn't it funny how big pharma versus big food and all that stuff? Allison remembers a quarter as a kid. Yeah. I don't remember a quarter. I do remember 50 cents. Ron, I'm not as old as you. The convenience stores were 99 when you went in. Well, no, that was just because you were in California, dude. That's always been the case. Don't worry. I think you are as old as me. I'm only 50. I may feel like I'm 900 years old these days. I didn't sleep well last night. My knee was kicking my ass. This knee thing, I'll tell you, it's a one step forward, one step back kind of thing sometimes. Not as much fun. So I'm sure I'll be feeling good in a few weeks. I'm 3 weeks out right now. I have pretty good range of motion. I can bend to about 110 degrees. I'm doing my own rehab. I'm not going to a physical therapist. I'm working out scar tissue, physically massaging my knee, working my wound. I listen to my body. But I do push. And yesterday I pushed a little and I paid for it. So you got to do a little bit of each, a little bit of each. So anyway, well, thanks, my friend. So glad to have you here. I'm going to wrap it up. We'll see what tomorrow brings. Hopefully we don't see things worsen today. Do stay ready. If you are not on some kind of service to make sure you're marketing what's going on, today's a good day to sign up for our text alerts. You want to make sure that you're protecting your pipeline. If we do see bonds start to sell off, if something happens in the headlines, if markets start to turn, if we do see bonds lose 12, 13, 15 basis points today, reprices worse become more likely. And you may want to lock some loans that are closing near term. We've got some really good rate sheets. You can't beat on it, but I'm not overly concerned, especially anything's closing a month out from now, 3 weeks, a month. I wouldn't worry too much about it. Even if things got worse today, I wouldn't necessarily panic lock, because we'll see it come back around in a day or two. With all this, we're not going to see an escalation. I don't think so. And markets are fatigued. They want to see the stuff come to an end. So, Ron said, I got some great comments on last week's OS Weekly agent tips. Thank you, sir. Appreciate that. Thank you for the softball and the plug. So Ron is talking about our Originator Success program, y'all. You guys can check out Originator Success. Check out a demo. Go to the Originator Success website and you'll check out a demo on there. You don't even have to sign up for anything. You can just check out the demo. So, all right, I'm going to wrap things up, y'all. I hope you guys can join me tomorrow, and I'll see you then. Take care, everybody. Bye-bye.